Hey, it's Justin from Braithwaite Realty with your Queens market update for November 2025, looking at the numbers from October. Last month, we saw the market begin to slow down, and this month's data from October sent some mixed signals. The median sales price dipped, but the actual measures of buyer demand, pricing power, and speed both accelerated. So let's dive into the data. First up is prices. The median sales price for a single-family home in Queens was $880,000. That's a 2.1% dip from $899,000 last month and a slight one-month pullback. The more important figure is the long-term trend. Prices are still up a very attractive 7.8% from $816,000 this time last year, and this is actually ahead of the 5-year compound annual growth rate in Queens of 5.1%. Now here's the most important number this month: pricing power. Homes sold for an average of 97.9% of the asking price. That 97.9% is a sign that competition is heating back up. It's the strongest we've seen since the peak of the summer market in June, and it's far above the 5-year average of 96.6% for this time of year. What this tells us is while the median price dipped, meaning the mix of homes sold might have been slightly less expensive, the homes that did sell were in higher demand, and we're seeing a higher level of competition. A quick pause. If you want to know how to position your home to get that kind of 97.9% result, reach out. I'll help you position your home for a successful sale. Now let's look at the speed of sales. The average time to get a signed contract was just 36 days. This is a reversal of the 40-day slowdown we talked about last month, and this 36-day pace is 4 days faster than the 5-year average for October. So let's put these two metrics together. Homes are selling for nearly 10% faster than the 5-year October average and for a record high percentage of their asking price. And finally, inventory. We ended October with 2,015 single-family homes for sale. This is down from last month, which is typical as listings slow down for the holidays. But buyers, you still have 8% more homes to choose from than last year. So the bottom line, these are the mixed signals I mentioned. Don't be fooled by the dip in the median price. The real story is that the market's core demand indicators are accelerating. Sellers, that 97.9% ratio is your key takeaway. It shows that buyers will reward a well-prepped and strategically priced home. And buyers, that 36-day pace is your takeaway. The competition is heating back up to the strongest we've seen since June. Your one piece of good news is that 8% extra inventory. You have more homes to see, but you have to be ready to act fast when you find the right one. Want to know how to navigate this fast-moving market? Reach out. I'll run the numbers for your specific situation. And don't miss next month's update. We'll be watching to see if this demand holds up as inventory continues to tighten for the winter. Hit subscribe so you don't miss it.